Hello, everyone. My name is Drew Dosek, and welcome to Trading the Close. Today, we're getting ever bit closer to the big day. Tomorrow, after hours, Nvidia will be reporting earnings. And today, the volume in the markets was dismal. It was nearly more than half of our 30-day average on the S&P 500. So that tells me a couple things. Investors really don't want to load the boat until they have the information that's going to be conveyed tomorrow after hours with Nvidia. Since Nvidia is such a big company, it can certainly move the markets. If it does sell off tremendously, the likelihood the rest of the S&P 500 is going to do so. Same thing's true for the other side. If it pops, the rest of the market likely will pop. So before, again, getting too involved and loading up in positions, investors are kind of sitting back right now, taking profits on some of the positions and waiting for price to sort itself out. With that being said, let's see where price did sort itself out today in the market summary board. So we see here the Dow Jones is up slightly at 0.23%. NASDAQ also up slightly, 0.21%. Same thing with S&P 500, up 0.34%. We see U.S. oil did take a decent hit today, down 2.19%, nearly erasing all of its gains yesterday. And then gold actually did start breaking out of the declining trend line. So we'll have to see tomorrow if we will have any confirming move above that declining trend line. Bitcoin is snapping back ever so slightly, up 0.93%. So let's go in the S&P 500 heat map, and you see here we've got basically a mixed bag with just slightly more greens than reds. We have Microsoft pulling down 0.5%, Google down 0.77%, but then Apple up 0.75%, Nvidia now up 1%, again going into earnings tomorrow. AVGO, nice day, 1.46%. Cisco, AMD, all around the 2% area. And also Boeing, we've had some decent pushes on some stocks, but nothing extravagant in the big mega cap range. Next up, the S&P 500, we go, and we can see here that basically we're now starting to close. Wow, with the last 10-minute candle, now we are pushing above this inclining parallel channel. If you remember, I was highlighting how on Friday we broke above, bounced on top like a bouncy ball. Then the next day, we then came down underneath on Monday. And here on Tuesday, we see we did have some selling pressure pulling the markets down. But man, we fought right back up. Resilient markets, guys, watching this, especially going into the close live with you guys, because if we get a solid close up above this parallel, then that's likely going to target the upper end of the parallel next, which is going to be right around 65.27. I move that over to tomorrow. That's at 65.30 on the SPX. So be watching that number, especially if we do close. We're about 1 minute and 38 seconds left. And we'll see that later on. Next up, the Qs. The Qs here basically just kick the can into tomorrow. Sideways consolidation, mainly all within yesterday's price range. So not much new to report there. Same thing's true on the SMH, except for we got a slightly higher push. Could be Nvidia moving up 1%. As I said, that does have such a big weighting on these indices. So SMH did had a nice move today, up 0.95, 0.94%. Be watching this area on the parallel at 299.13 as resistance. If Nvidia does pop, we're likely going to this inclining trend line that's up here roughly, and it's off my chart at the moment, but you see here it's around $314, $315 on the SMH. Next up, IWM. Great move a few days ago on IWM on Friday. Since then, has maintained all of that move and is now consolidating in the top half range of this big green candle. That's a very solid, positive momentum for the near term on IWM. One thing, though, I want to at least draw your attention to, notice this trend. This trend really hasn't peaked above this area. So in essence, you know, this trend line kind of going like this, it's kind of like a parallel that's holding price inside this range. So the range to move up before we hit resistance, should we bust through this 236.63, it's not going to be too far away. It's going to be right up here on this resistance trend line. Now, obviously, the longer I extend that out, that's going to be a mighty move and could imply new all-time highs, guys. See that over there? So this consolidation is critical on the chart of IWM. The more we consolidate, the more momentum we build, and consolidation underneath the resistance level typically implies we're going to break through that area. So if you're IWM bull, you want to see consolidation over the next 5 trading days minimum. You want to see price action trade sideways, if not a little bit down, potentially to the top end of that pivot. And then that'll start lifting the markets up when that bull flag matures and rips higher on the IWM. Very neat chart for what's going on there with the small caps. Next up, Bitcoin. Bitcoin, as we said, we've had a nice bounce up today after breaking down underneath this inclining parallel 50% area of this chart. Still targeting Bitcoin to come down here for a bounce right around 106 to 107,000 on the chart with this declining trend line. That's likely going to be the area that will provide very good support for a sustained bounce on Bitcoin. Not maybe to new all-time highs, but at least a sustained bounce opportunity. One thing I've been noticing too, guys, is when these cryptos have fallen, there's been a lot of buyers on the sideline eager to snag it back up and even push it to new highs. And I think Ethereum has something to do with that too, with all the new interest in that cryptocurrency, pushing it near the $5,000 mark. And plus, I wrote an article about Ethereum the other day, talked about it on the show. It actually is showing it has the potential to go up to $7,200. So if that's the case, Bitcoin's going to be making new highs, but it does also explain why this support level has yet to be tagged, even though I am still waiting on it to get touched. Next up, we've got gold. And as I said, gold did start poking above this declining trend line. But notice we've done that before and then immediately failed. And then we did it again here and then failed. The one thing, though, that is making me think this could be the breakout is that we've already tagged this upper end several times. And we've done so fairly frequently in the past. So that's showing that this area is getting weaker and weaker and weaker every time the price hits it. Ultimately, tomorrow, we need to see a confirming move. Just because we have one day of break above, that is good, great, fantastic for gold, but that's not showing any change in the chart at this current state. We'll have to reevaluate tomorrow and see if this is actually a sustainable breakout above this declining trend line. Next up, silver. Silver, much like the Qs, really consolidated sideways within price action that occurred yesterday. So decent move on silver, still in the bullish consolidation range for the near term. We want to see price consolidate out for the next 4 to 5 days, and that will build the momentum for an attack on this inclining trend line, which is roughly right around $40 now, should we space it out over those days. So it could be a target for silver in the near term, right around $40. Here's U.S. oil, as you see here, negating basically all of the gains that occurred yesterday. That's not a very good sign on the chart. You want to see consolidation. If you're a bull on oil, you want to see it consolidating basically above these pivots. Now we have price coming down underneath those pivots, implying that we're likely going to come back down and test this declining trend line right around $62. I still see oil coming down here to this other declining trend line, which is now getting lower on the charts, currently right around $58.24. Next up, nat gas. Look how nasty the sell has been in nat gas. Ever since July 23rd, nat gas really hasn't been able to sustain any bounce. And you can see that clearly displayed with the trajectory of price action just going down in a diagonal fashion here on nat gas. This has really kind of been nasty. Anybody that does have hope, say they might have bought here, had just a couple days in the money, then just got slammed right back down, then had hope again, barely getting in the money, then slammed right back down again. Very tough trade going long on nat gas now. I'm sitting back waiting for 255 to be tagged. What would be ideal is that within the next couple trading days, we see a major flush down to that level, which that would actually, believe it or not, make it actually a stronger level to buy. The more that we consolidate right before a level implies that we could pierce or go down to the next level. So I'd rather see a big flush out over the next couple of days, which would be a good buying opportunity for a long on nat gas. Next up, 10-year yield, basically kicking the can into tomorrow also. Still bringing this up, displaying that this bear flag pattern is still valid on the charts, implying a move down here to 4.095%. Again, we do have the FOMC coming out with news about potential rate cuts next month in September. Not far away, guys. This year is just flying by. It's incredible how fast 2025 has gone already with everything that's gone on in the markets. All right, next up, we've got HIMS. HIMS here. Look at this beautiful fall on HIMS and is now putting in bearish consolidation. But I do want to note, look at where price caught support right here, 41.72. Beautiful area of support, not the most ideal bounce scenario you want to see, especially after a sharp decline like that. You should also have a sharp retrace. And in fact, this did break this inclining trend line. So price typically likes to go back up and test that trend line. And as you see here, we're putting in bearish consolidation. That implies we're likely going down further before heading up and tagging that trend line. So roughly the support down here at 33.91 is where I'm eyeing HIMS for good support for a potential bounce up to at least tag this area, which would be flipped to resistance at 41.72, and then eventually attack this 47.89 area. But if we do fall down to this 33.91, there's no chance that we're going to be tagging this resistance trend line before this wedge ends. We'd have to extend it out like that, which in that case, that would get HIMS a very nice bounce potential. So keep this trend line on your radar for HIMS. This trend line likely will be tagged again at some point in the future. It's just a matter of pinpointing that support area, which current support, 41.72. You can be aggressive in or here, but there's a bearish consolidation forming, implying we should be coming down to the next level at 33.91 before attacking that trend line. Next up, Apple. Now, we covered Apple the other week, but I wanted to bring it up and show you and remind you that this area down here, 218.25, would be an ideal scenario for a long position on Apple. Now, keep in mind, as I've said at the beginning of the show, Nvidia really controls the price movement that's going to happen, especially on Wednesday after hours, moving into Thursday and Friday. And obviously, Monday, we do have a holiday with Labor Day, so markets will be closed. And there will be a lot of digestion going on with what just happened on Thursday and Friday in the market. So regardless, if Nvidia does sell off, watch Apple, because Apple likely will come down too underneath 220 at 218.25. That'll be a great area of support, considering Apple did just break out of this declining trend line that price has been under since December of 2024. So this is a great breakout currently in play for Apple. The more aggressive level to buy would be right here on this pivot. But notice if I go over on the screen, that occurred right where all this consolidation happened. So that area right now is support, which is at $224. We'll see if this right now near term immature bear flag forming on the chart of Apple. For Apple to break that, needs to get price above this big red candle right here that occurred on August 20th. If price still maintains within that candle and presses forward sideways, we're likely going to be coming down to 218.25, but ultimately Nvidia will likely give us a clue Wednesday afternoon. So keep these levels on your radar if you are playing Apple or interested in getting into Apple. Next up, eBay. Now, I just brought this chart up. Yes, we did have a steep fall and decline here on eBay today, down 3.97%, but I bring this up for a couple reasons. One, notice we got a bull flag right here on the chart. Right now, that bull flag has failed. Compare that to gold, as I mentioned to you before. Gold right here, bull flagging at the top of the chart, almost looks like it's starting to break out. We'll see tomorrow, as I've said, but usually bull flags at top of charts fail like this. So I go back out on the chart and even click the weekly time frame. Well, look at this trend line that I have generated on the screen from a pivot down here in December of 04, guys. 04, that's a long time ago, over here to this pivot that occurred in October of 2021. Now, I zoom back into the charts, and you can see that this trend line now caught support and price today on the chart of eBay. Truly fascinating stuff when you can just simply draw lines. And more importantly, where you know where to draw lines on the chart, it can give you a boatload of information, because what happened today, we retraced the scene of the crime. Now, tomorrow, that's what I'm watching for eBay, because this right now is a failed move on the top of the charts. Usually the biggest moves come from failed moves. Right now, we caught the first level of support. Does this level break? And if so, we're going down to 91.13. And then potentially, if we do have a hard sell in the markets, the next support, the significant, is all the way down here under $80. Now, there will be potential bounces at this pivot right around $84, $85. But still, this is basically the ledge of a cliff for eBay, considering that we marched up so steeply on the charts. And guys, this is what happens. When we go up without proper consolidation, we can fall like jumping off the side of a cliff. Beware and be careful if you're ever in plays that literally start rocketing up. You got to be considering hitting that sell button and taking profit, because you don't want to be caught one day, in the glory zone with tons of profit, potential profit in your portfolio, then the following day having it all be erased. So just beware of this, because this does happen often in the markets. The markets like to repeat themselves. Now, next up, we've got Tilray and CGC. These are a couple cannabis stocks. There's been a lot of rumors floating around that apparently cannabis will be rescheduled from Schedule 3 to Schedule 1. Well, the curious thing about that is Schedule 1 actually still is labeled as a drug that has no medical or is not supported or accepted in the medical field for any medical use. However, all across the country, nearly half the states have some sort of medical program for cannabis. So first things first. So the rescheduling from Schedule 3 to 1 would be a step in the right direction to go with that trend as far as the medical marijuana across the United States. But that doesn't end the regulation. That won't allow for banks, for them to be operating with banks and have true deposits. But it's a step in that direction. So at least that's what's going on now with these marijuana stocks. A lot of investors have heard these rumors floated. And to be honest, they were floated during last administration too. So this isn't anything new. But that rumor mill is now swirling up again that they potentially will do the rescheduling, which is why you're seeing these big pops on these stocks. So let's get into some technical analysis on this. So today we did see Tilray push up very nicely, got as high as $1.55. Now note down here in June, it was around 35 cents. So this move now puts Tilray just in the last couple months over a 330% gain. These cannabis stocks really can generate a lot of momentum and moves. But when you look back on the weekly chart, you've got to be ready for the equally sharp sell-offs that occur with these, because every pop that has occurred on these stocks has been met with equal selling pressure down. So you've got to time these plays correctly. And hindsight's 2020, looking back here at 36 cents, might as well just pick some up for the heck of it, because we know the way that this stock does fluctuate. 300 and something % move up. Didn't see that happening, but still ultimately fantastic move on Tilray. Should this momentum continue, notice we've got this declining trend line. This is back from September of 2023. That is the line in the sand to beat for a potential breakout to the upside on Tilray. We still have to get through resistance at $1.66. And considering we are as extended as we are on the charts, the more likely the probabilities dictate price is going to be coming back down. If you notice, we do have a nice gap fill down here at $1.16. Then we have this pivot support right around $1. So that's going to be the area of support. Now, if the Schedule 3 change to Schedule 1 or Schedule 1 to 3, if that doesn't happen, if they still remain the same with cannabis in Schedule 3, then ultimately the support area is all the way back down here at 75 cents. I would be interested in getting back in at that point, as that would be a steep fall and technically should have a nice response bounce on that chart. Now, CGC here in Verified Investing today, all our members, we took a 20% profit on this trade that we held for 3 days, guys. 3 days, 20% on a swing trade. Thank you very much. And it's all because of technical analysis. Now, yes, I pay attention to the news. I know what was going on. That's why CGC initially got this big pop about the rescheduling of cannabis. But if you look on technical analysis, guys, this is beautiful. Look at this declining trend line right here. And look how when price broke out, it came back and retested that trend line. That's your buying opportunity. And then boom, nice catapult springboard bounce up. That's my springboard diving board play. I love these so much, because not only am I buying price into a support area, I'm getting a rapid decline after a breakout. Man, just go ahead, take my money, buy the stock, and then I'll take my profits in 3 days. Thank you very much. Easy trade to be done, but it's awesome how you can pay attention to little bits of news. Maybe I didn't catch this initial pop. That's okay. I understand technical analysis. I understand what happened here on this chart, and I can read that this is likely going to be another reflex bounce. So perfectly done. You don't always need to be the first to the dance. As long as you're there and you know what's going on, you don't need to be the early bird and get the worm. You can still understand what's going on in the charts, buy technical levels of support and sell levels of resistance. Next up, SMTC. Now, SMTC, nice pop on this stock today, up 15.14%. This is an under 10 billion market cap company. Regardless, you can see they popped on earnings yesterday after the bell. They had a beat on earnings per share, and then they also beat on revenue, 0.6%. Nice beat there, and the reaction has been upward for this stock. Today, we actually did catch some resistance. Notice this inclining trend line right around this area of $58. We ended the day pushing higher above it, right at $58.72. And you see here, this area was the area of resistance. And ultimately, we had an intraday pullback for now. Let's see, though, what happens with SMTC. We need to have more consolidation sideways after this nice move up. Then we could be looking at this 67, 65 level. Beautiful move, though, from the earnings that occurred yesterday. And lastly, I want to show another chart that displays beautiful technical analysis here. If you guys know, and maybe you don't, so if you don't, this is a great opportunity for you. We put out, all the pro traders here put out free technical analysis articles every single day. We put out a minimum of 2 on each one of our pro traders. And if you look back 6 days ago, back onto August 8th, I wrote a report highlighting NEO's bull flag that was going out. This article published on Wednesday, August 20th. And I wrote it actually the night of the 19th. However, besides the point, this bull flag, look at how it played out. Played out perfectly to the measured move of 622. And then it said, we're not done yet. I'm pushing up more. So it went up to the next resistance at $6.71. And why I bring this up is just like what happened with CGC, folks. Notice this breakout. Very similar situation we got going on here, right? If I scroll back out on the chart, notice this declining trend line. Let's flip back over to CGC. Look at this declining trend line right there on the chart. Breakout, beautiful breakout, busting through a couple levels of resistance. We go back over to NEO, doing the same thing, except for this was highlighting to us before that we had that bull flag telling us the likelihood we're going to bust through this declining trend line level of resistance. Sure enough, it did that. Now what you do, sit back and wait. Wait for a pullback. We're extended and we're overbought in the near term. Look at us poking up above 75 on the RSI. So sit back, wait for a support level to buy. Where are those support levels? Well, you can see right here on the chart. This area now that we got above the bull flag measure move, that would be the aggressive level to entry, $6.22. I'm going to wait a little bit further down on the chart. Notice these pivots that occur right here, right around $5.50. That's the area that you're going to want to target to enter. And then if selling pressure pulls down even more, notice we got the declining trend line right here, $5.14. You could always add to the position there or be conservative and wait for a full tag of that declining trend line before you put some capital at risk and invest into NEO. But still, technical analysis 101, beautiful stuff. Many different patterns displayed there on the charts, and they all worked out much like we anticipated and much like the charts were telling us. So these things can be predicted. It takes a little bit of an effort, but anybody can do this. I'm not a rocket scientist. I just love studying charts. And when you put in the time to study these, you can start generating profit, very much like all the members did here at Verified Investing. Now, guys, don't forget, give us a thumbs up and subscribe to the video. I want to be able to bring all this data and information, trading signals and alerts, great levels for you guys on all the future episodes. So please do us a favor, thumbs up this video and also subscribe. We'll love to see you guys in the future. Until then, I'll see you guys on the charts. Have a great day, folks.